Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, March the 12th. The year is 2020. Let's talk trading. Walmal method, day 10. Oh, there's a few people who I guess been watching the videos and they're interested in the method and they're asking questions. Um, the thing about the method is you just have to basically follow the method. But if you try to outthink it, you're going to get burned. Um, you even when you think, and once again, there's that problem. Think that the market should do something, it's going to do not something. In other words, if you think it should go long, it should turn around and reverse, and you go long, but the method says short. You're going to wind up in a world of hurt because you're not using statistics. Once again, this is statistical trading and it's based on range and the movement per hour, and it's a scalping method. We're looking to get 2, 3 to 5 pips. Sometimes you get in just right and the price keeps moving your direction and you can bank, 10, 20 pips or more. But that's not the goal of this method. The goal of this method is to go in and get 2 to 5 pips. And, if you're going to sit there and trade a 4-hour session or so, you should be able to bank 10 plus pips. But of course, boys and girls, fellow traders, you have to remember one thing. These videos are for educational purposes only, and your results may differ from mine. And that trading's very risky. You can lose all of your money in the blink of an eye. So, if you need trading advice, financial advice, investment advice, seek your advice from an accredited financial professional. That way, when you take their advice and you lose all of your money or a big chunk of it, you know you took the advice of an accredited financial professional instead of some guy with a funny name who posts YouTube videos or posts on Facebook or any of the other places where you can go and get trading advice. And that being said, as you proceed, make sure you have your risk management in place so you don't lose any more on any one particular trade than you're willing to lose. Otherwise, you're going to be sorry. Okay, we'll blast through the charts real quick. As you can see, the pound dollar is just tanking. I mean, it's 124 pips below the previous week's low. It's tanking. You see where it is right here? This is a possible reversal territory. So just remember, these videos are for educational purposes only. And we still have some gaps that probably won't fill, but who knows? Anything could happen. This could close up green for the week. Who knows what news might come out? You can see here it put in a new yearly low today. We're 26 pips, so we're just 6 pips above the yearly rat zone. It blasted right through the opening range for the week here. I mean, it just sailed right through it. Inside bar, once again, there you go. 7 days ago, short at 27, call it 40. You're up 130 pips. I mean, it's just unbelievable what's going on this week. And you can see here again off of the previous day's low, 194 pips. The ranges, we've only got 1, 2, 3 pairs under 100. But look at these ranges. I mean, once again, this is just astonishing, the price action. This is like back in the old days. I'm loving it. Buy zone, we had a pivot point here. It's a long trigger, didn't hit it. You should have taken your profit right here, and you see you come back down below. There was another buy zone trigger here, but then short, and the rest is history. Okay. Rats, green rats, get ready to feast. Green rats already had a little munching right there, but then hopefully you took your profits because right now you get to eat again. As far here, we're at we've actually passed the weekly S2 on the pivot chart. Once again, missing the daily pivot. Here you see we have a missed daily pivot. But what's really interesting, boys and girls, look at that. Look at all those. You have to go back to 2018 to start picking up on missed pivots. I mean, that's just astonishing. And you can see here there's no missed pivots to the downside. They all got cleared out. Wick zone, in and out, in and out, in and out, in and out. In fact, I noticed there's a few wick zone traders that were profiting very well here. Oh, it looks like I'm going to have to pause the video for a sec. I had changed a few things around and I hadn't reset my templates for today. So here we go, looking at the basically the original Walmal, the way he first traded it before I wrote some indicators. And you can see here we had a short trigger at 26.20. Had you taken that trade, you could have picked up 10, 20, over 30 pips there. And remember, this is a scalping method, so all we're looking for is to make a quick 3 to 5. Now let's see here. If we switch the time frame here, you see what happens is in this indicator, it's going to show you where, in this case, the M15 candle opened. But with Walmal, we're only really looking at the H1. I might have to change something in the sweet spots, but for now, just remember H1, it's all you have to look at, and it's pretty clear. Of course, you can use the Walmal lines indicator that I wrote, and you can see here from the beginning of the hour, trigger long 30, trigger short 20. I'm sorry, yeah, trigger short. Here's a take profit line was right here. Notice it came through and then back through. So obviously, when this candle closed here and then started going back, I mean, you should just taken your profit. And of course, you know, a lot of times you might be upset because you said, well, if I would have stayed in, I could have had. But you see, fellow traders, that is the thing you have to overcome if you're going to use a scalping method. In fact, I was talking with Walmal this morning. He says after he gets done with the trade, he just turns the trading screen. He flips to something else because he doesn't want to look, because he knows he's impulsive. And he said he might get back into the trade when it's like, nope, let's just wait. And so he'll just pretty much walk away, be happy with his 2, 3, 4, or 5 pips or more. But I know we were on the phone earlier, and I think he had a 18 or 20 pip run on one of these he caught, because the pound has just been tanking today. Just tanking, as I showed you in those earlier charts. But really, you have to understand what this method is supposed to do for you. It's supposed to give you the opportunity to take, 2, 3, 4, 5 pips, and that's it, no more. And if you try to push it, you're getting away from the method and you're on the path to ruin. We're exploiting the range on the hour, and here's the ranges. This hour was 41, before was 98. These are hourly ranges. It's just it's insanity, these ranges. But the thing is, you can see here, this method says, okay, from the high to here to the take profit line, I think I've got that set at 15 pips. So right here, you can see there was a nice 12 pip target. But, if price moved, in this case, what did it move to? Low of 15, you got in at 20. So, and it started reversing. You should have been out here somewhere between 3 and 5. Right here. Price started to back up on you. But actually, you see it moved. It started to back up on you. You should be out. And then, of course, it turned around, and then you'd be screaming and yelling. Yes, I know. That's why I turned off that video yesterday and came back after, trying to keep the channel clean. You don't need to hear me cussing at the screen while I'm trading. And yes, sometimes I do cuss at the screen. I think we all do. We're human. But the fact of the matter is, you should have been out with about 3, 4, or 5 pip profit right here. And then the fact that it ran, that's just the way it is. Because it could have just as easily came here and took off the other way. You don't know. You only know in hindsight. You don't know. In the moment, that's what you have to do. And forget about it trying to do this. Just forget about it. It wasn't there for you, not this trip. Now, of course, that being said, maybe say, let's say you normally trade 2 lots. I don't care if they're mini lots, micro, or regular lots. You trade 2 lots. You put on a 2 lot trade. Well, you could have put on 2 1 lot trades. And so what would have happened is when the one started to back up on you, you could take profit, let the other one ride, move your stop loss up, so you either get out even or not because you've already banked some profit, okay? And then you let that other one ride, and then maybe you do bank one of these down here. So, that is the alternative. So right here you sell, you're going towards your take profit, okay? But it's backing up. You jump out of one of the lots, you move your stop up here. So worst case scenario, you break even or you're break even plus 1 or 2 on the trade, but you don't give it all back. And then as the price is moving, then maybe you can start ratcheting your stop loss down, and then who knows, maybe right here you got out. Because if you use the mid dots here, the price cross, back through the midpoint of this candle, just exit. So you would have had a nice profit there. There's no doubt about it. So that's how you would do it. So you split up your trade into 2 pieces or 3 pieces, however you want to. But what you don't do is mess with the method and let it go against you, because you're going to get bit. You are going to get bit. And even if even if right here, if this right here is even 1 pip off of the daily low, take the trade, because price has to range, and it hasn't ranged yet until it gets through this line. And you can see here what happened. I mean, you can what now? If you're wondering what that indicator is, it's TRO ranges. It just shows you the ranges. I mean, you could put up more bars if you want, but I just look at the last 10 or so. But let's see, where is it? Yeah, my bars. I mean, you could put 15, or let's say 16 the last 2 sessions, and then it'll just tell you. So you can see here, a few hours ago there wasn't much of a range, but then it also dropped down here, but then you see things picked up. And so this is when you want to trade, 8 bars ago, H1 bars ago. I don't know if there's really anything else I can say. I mean, it's very simple. And so that's why on this screen I have nothing else. I don't have my GPS. I don't have high-low lines. I don't have open lines, because I don't want to think. I want to react. And I'm telling you, you put those lines on there, you start looking at other charts, you're going to mess it up. This is all you have to do. And if you don't have this indicator, the donational, you can use the sweet spots. You can download it, no donation, it's free. But right here, it tells you go short at 26.20. That's it. You go short at 26.20. You go long at 26.30. And when the hour ends, wherever this goes, wherever this winds up in between, it's going to give you new buy and sell triggers, and you take them. That's it. Because you don't know what's going to happen next. The reason you entered a trade has no bearing on the outcome. Whether or not you hit the take profit, whether or not you hit your stop, whether or not you just get out with a couple of pips, you don't know ahead of time. You just don't know. So you be happy with a couple of pips and they add up, and then you wait for the next hour for the next trade. But you don't have to. And somebody says, well, do you go back in? Well, if you feel confident, if that's what it's telling you to do, sure, go ahead. In other words, you could do that, because see, price here, when it came back right there, it hadn't reversed, but you'd be going in on a let's see, right here, if you were to re-enter, the hourly candle would still be green. So just remember, fellow traders, it's not what you trade, it's how you trade it. Drain the banks.